Welcome everyone to Cisco's Virtual Kitchen. I'm sorry I'm in a new studio today, so I'm all over. But we have a great show lined up today and everything dealing with food inflation around our industry, what's happening. We've got an amazing guest lineup, and I'm going to bring them in here in a second. But I'm going to start off today with Dr. Sylvain, and I have to apologize. I'm going to say your last name wrong, but welcome to the show.
Well, thank you, Jay.
Welcome. And so let's talk inflation, food inflation. You're the biggest expert in Canada when it comes to food inflation. What's happening? Let's get right into it.
Lots of things. Obviously, if you go back 6 months ago, we released this report. So every year, Dalhousie, Guelph, Saskatchewan, and UBC, we get together to forecast food inflation for the next 12 months. What we've learned over the last decade or so is that forecasting is really, really hard. Why? Because a lot of things can happen. But 6 months ago, we did predict somewhat what is happening now. There's a lot of things going on right now with commodity prices, with freight costs, and it's going to be impacting the food service industry for sure over the next little while. So I'll dig deeper into some of the causes a little bit later, but essentially, Canada's food price report predicted a food inflation rate of about 5% for 2021, and right now we're into June, and that's pretty much what we're looking at. By the time we're done with 2021, we're expecting to be at about 5%. But when we talk about food inflation, we have to be a little bit careful here. Food inflation tends to be measured in averages, but in actuality, food inflation is often felt at the margins, really, and that's why the food service industry operators will actually notice that food prices are going up because they can see that some of the things are moving up. But with averages, it's hard to detect exactly how food inflation is going to be impacting your business. And consumers themselves, like all of us, we do go to the grocery store on a regular basis. We've all noticed that prices are going up, while StatsCan is telling us that the food inflation right now is at 0.9%, which is impossible. It's not. So it's just one indicator that I don't think is capturing the real story out there. So if you think that prices are going up, food prices are going up, they are going. It's not a mirage. Consumers are noticing, and the food service industry is also noticing as well. And so that's certainly a reality that we need to keep in mind as an industry in particular. And food service has gone through a terrible period. I think everyone knows that the pandemic has been unkind to the sector, but there are positives, and I'll talk about the positive a little bit later if you don't mind.
No, I think that's awesome. We got to hear positive. Absolutely.
Well, there's going to be, I think everyone agrees that there's going to be pent up demand. We actually, as a lab here at Dal, we have partnerships with different companies, and they collect data for us. And I just want to share a couple of things with you guys today in terms of some of the data we're seeing right now related to the food service industry. So with online, because obviously most of the country has been under lockdown for a long period of time. We're slowly exiting the lockdown era, I guess, in Ontario. Here in Nova Scotia, same thing today. Um, Over the last 6 months, since January, steady. About 30% of Canadians have actually ordered food from a restaurant using a platform uh, once every 2 weeks, at least once every 2 weeks, 30%. So it got busy online, and that 30% has been steady. We don't expect we are expecting that number to drop over the summer, but we actually think that there's been we're dealing with new habits now. People are going to start ordering online. And of course, when you order online through some of the platforms, you do pay a premium for convenience. You pay extra fees here and there. And of course, restaurant operators have to cope with more fees on their side as well, which is not necessarily great, but it pushes restaurant operators to bring up prices. And I think the market, and this is my reading of the market right now, consumers have actually started to accept the fact that going out or ordering food from the food service industry will cost more money, and they are willing to pay more money for the next little while because of that pent up demand.
Mhm.
After that, of course, when reality sinks in, we don't know what's going to happen. Nobody knows what's going to happen, really. It depends on what goes on in the United States, what goes on elsewhere around the world. And with Canada, what we know is that some consumers have done very well during the pandemic, and they do have a lot of cash. They'll probably use that cash to move around and become nomads again, but will that continue for a while? We just don't know. and,
Mhm.
and so we believe that the people will continue to go out. There's also this issue of the workforce, the future of the workforce. Where are people going to work? And
Mhm.
in the private sector, I think there's some consensus in terms of getting people back physically to work in some building wherever they were before the pandemic. I think that pressure is there, but in the public sector, if you think of places like Ottawa, for example, where there are thousands and thousands of public service workers, unions are putting a lot more pressure now to actually allow people to work from home more often.
Hmm.
And that's going to actually impact the food service industry in some markets much more so than others.
What do you mean? Can you dig more into that, Sylvain?
Yeah, uh, for since the start of the pandemic, we believe that really telecommuting is going to be a huge factor for the food service industry,
Mhm.
and we've seen from different chains that they've recalibrated their portfolio of outlets in the last little while. Some
Mhm.
have done a lot of changes already. And so we are expecting more changes down the road. The market we will service is going to be a little bit different. So thinking of the drive-throughs, thinking of people, exiting cities to go to suburbs. I mean, every time you read a real estate report, you're hearing more about the fact that rural Canada is much more appealing. People were looking for lakes, space. If you're here in Nova Scotia, it's incredible the activity that we're seeing in remote places, and these places will have to be serviced in another way. So
Mhm.
I think operators will need to keep a close eye on the future of the workforce, where people are working, and if you work from home, your relationship with food is completely different. Your will to what you order, what you eat, where you eat, with whom you eat
Mhm.
is all going to change, obviously.
Absolutely, and I think we've seen that, right? And I've seen a lot of places, especially the breakfast sector, like the breakfast market right now. That a lot of restaurant chains that were really capitalizing on prior to COVID is almost just like it's disappeared. It really
Yeah,
has.
No, absolutely. And there were, I mean, there was a lot of fake commuting going on at the very beginning of the pandemic.
Hmm.
People just going out, leaving their house just to drive around, pick up something at the drive-through. But we don't think it's going to last. But you're right, absolutely. The way you grow your business is going to change as a result of a new market. We do believe that the market won't look the same after the
Hmm.
pandemic than before. So if you think that we're going to go back to how things were, we're not entirely sure. Now, the issue right now that most people are talking about in the business world is inflation. I mean,
Hmm.
inflation is a big deal right now. Uh, what people may not have realized over the last 10 or 15 years is that Asia has put a lot of pressure on commodity prices, wheat, barley, canola, corn. I mean, all of these commodities are way up right now because China is buying, well, everything really.
Hmm.
China is actually buying next year's harvest, if you can believe it. Now, over the last couple of weeks, we've seen some contracts being canceled, but that's why canola is way up. I think 70% year to year. Corn is up 88% year to year. Most commodities are up. What's really interesting is that it's basically 2008 all over again, without oil participating.
Hmm.
If you remember, Jay,
Yeah.
in 2008, the barrel of oil was worth 147 US dollars, a
Yeah.
record. And just a year ago, it was worth minus
Yeah. Yeah.
$33.
Yeah.
It was stupid. It was incredible. Now it's back up to 60, I think now, but
Yeah.
it's not pushing this sort of ag super cycle. Right now, what's going on is that China is really boiling and North America is recovering.
Hmm. So they're ahead of us, is what you're saying. They're ahead of us through this
Pretty
process. Yeah.
pretty much, and it's really putting the entire world economy uh, in not in sync essentially. Now the Americans, we are expecting the Americans to have a really good summer, a solid
Hmm.
second quarter, a solid third quarter. But until we get there, things are going to be a little bit hazy. And of course, that is also creating this problem with freight costs.
Hmm.
Moving anything around the world is costing way more. Some of the reports I've seen, it's twice as much and sometimes three times as much. Why? Uh, you may have heard of a container shortage.
Hmm.
Uh, there are a lot of containers right now in Vancouver and here in Halifax that are sitting basically, well, not empty here, but they're
Hmm.
loaded. They're actually being shipped. But in China, there's a lot of empty containers, and you have to kind of bring back empty containers across the ocean, and that's costing a lot more. And of course, the other issue is the pandemic itself. Ports, railways, intermodal facilities, they've all been affected by the pandemic, and it has slowed things down. And it's costing way more to move anything, to handle anything. And so that's why right now we're paying for it. We
Hmm.
are expecting things to calm down a little bit later, but until then, until things, go go back to normal, we are expecting companies to have to pay a little bit more to ship anything.
So, Sylvain, what's those positive things you were going to mention earlier?
Mm,
Let's get on to
Yeah.
those because I think first of all, I do remember 2008. I remember consulting with a lot of restaurants through that time period. That is when, I don't know if you remember, but remember when flour? That is when
Yep.
flour went up through the roof in prices, and people didn't know what to do. It was such a one of those commodity products that went through. I think it was like triple the price, and it did soften. But I
Yep.
do remember 2008, and I was right in Alberta at the time, so I remember those oil prices, and it was and labor, and we'll talk about labor here later on today. But it definitely was an impact of labor on top of it. So it was this perfect storm in a sense, and I think we're living that perfect storm is brewing right now.
yeah, no, absolutely. Well, I mean, here's a positive. So the one metric we closely look at as a lab is this service retail ratio. So
Mhm.
before the pandemic, the average household in Canada was spending probably about 35% of its budget on food service to feed itself. 65 retail, 35 service. That's basically what we had before the pandemic. In April of last year, after the panic buying and everything, it
Mhm.
was 991. 991. Okay.
Oof.
But since then, it's been creeping up. The service portion of that ratio has gone up. Now we believe it's at about 26%. So the split right now, the average household in Canada is spending 74% of its budget on retail and 26 service. Now, the question we're asking ourselves, will we get back to 35? Absolutely. I think we'll get
Mhm.
back to 35, but probably not this year, likely next year. But because of what's going on with prices and the value add aspect that the food service industry can provide to the market, we actually believe that the 35% we had before the pandemic will be exceeded. Now in America, that ratio is over 50 now. So it's a very different market altogether. Canadians don't go as much, but we actually believe because people will be moving around a little bit more, they'll be traveling again. The value proposition that the sector will provide will have more currency as far as I'm concerned than before the pandemic.
Mhm. Will
So
the
that's
will
a
the
positive.
Yeah, and I would assume some of the stuff that we've seen through TV and what we're hearing through the internet from the US will influence our buying practices as we open up more and more, seeing what they're doing down there. Will that happen?
Yeah, absolutely. Now the one concern that I have is lodging costs.
Mm,
It's costing more. People are more in debt. Shelter is becoming more expensive. Whether you rent or you're an owner, it's costing you more to have a roof on top of your head. And the two necessities of life essentially is shelter and
mhm,
food.
mhm,
And so that shelter piece and this is something we didn't expect before the pandemic. Frankly, when the CMHC in Ottawa said to all of us that the real estate market was going to crash in April of 2020, I thought, okay, well, that's a possibility, I
mhm,
guess. But the opposite happened. The complete opposite. The real estate market, the average value of a house in the GTA now is 1.1 million.
phew.
Like who would have thought of that like 12 months ago?
So
It's
what
it's
caused that? Because I did see that same thing. All of a sudden, houses were flying off the market, prices were going up. Who's affording this right
Well, I mean,
now?
it's so rates are very low.
Mhm,
And so here's the I mean, that's what economists are basically saying. So rates are very low. The one way to calm things down is to raise rates, but with an inflation rate at like in America right now, it's at 3.1% here. And typically, what happens if the U.S.'s rate goes up,
mhm,
ours will go up. So
mhm.
get ready, folks, this
Yeah.
summer. And that's why we're very confident with our 5% because we're probably going to be at 5% and even more. So
Wow.
now, as an operator, you may think, oh my God, it's going to cost me more for food. It's going to be costing, I'm going to have to charge more. The, the reality is that everyone will have to charge more.
Mhm,
It's not just you, it's everyone else. Grocers will have to do the same thing. Right now, if you talk to processors, whether they're manufacturing cookies, bread, livestock, it doesn't matter. Everyone has to pay more. Salaries are going up, not just in food service, but also everywhere else. And
mhm,
so the typical food basket in Canada will increase in price, which you know I of course with with food banks and everything that's going on with the pandemic, you don't want to leave people behind.
mhm,
But Canada's food basket has been incredibly affordable for the longest time. We have access to the fifth cheapest food basket in the world relative to our average income in Canada. And so Canadians have been spoiled. The problem right now that we're facing is that shift is probably going to be quite it is going to be very rapid.
Mm-hmm.
And when that happens, you leave people behind.
Wow. Wow. So I have a question here. So after the pandemic, so after we get through this, and we're just at the end, I believe, and I hope. How do you expect the industry to overall look like after? Like, what will it look like when it comes after this?
I think it will be stronger, just because, first of all, I don't know about you, Jay, but I've been impressed by the industry. I mean,
Mm-hmm.
it's at 26% now. Operators have been just surviving. They've been
Mm-hmm.
on a survival mode, and they're thinking about the market. They're thinking about selling. They're going after the money instead of just waiting money to show up. We're hearing about coast kitchens. We're hearing more about some innovative models emerging. I actually see a industry that is going to be way more fragmented and innovative than ever before.
Mm-hmm.
People are talking about the Great Reset. I'm talking. What I'm seeing is a great fragmentation of the food service industry. One example, and I know that labor is a big issue for the sector. Hiring
Mm-hmm.
people is going to be very tough. We're seeing restaurant operators looking at tips. We're seeing operators looking at different models in order to support their staff. I mean, we're not looking at a one size fits all model, but I think each operator will look at the economy very differently, and that will lead to more innovation instead of just trying to sell the cheapest thing possible to get more business. Getting more business is really about being more innovative, I think. So,
Mm-hmm.
for example, animal proteins are going to be more expensive. 5%. If you look at the trifecta of meat right now, chicken, pork, and beef, they're all expensive, more expensive. It rarely happens. Typically, you get hit by beef, you get hit by pork. This year was all
Mm-hmm.
three of them. But plant-based, I mean, we were talking before we went on air. We were talking about pulses and lentils, and there's oats also, all grown in Canada. I mean, there's lots of potential for these things, and I know that there's a lot of food service players, major players, looking at vegetable proteins because vegetable proteins are going to become more affordable.
Mm-hmm.
And the market is also growing 31% year to year for plant-based products in Canada right now. So,
Yeah, yeah, I totally agree with you, and we're seeing that everywhere with the plant-based products that are coming in here, the diversity, and it's almost in a sense, I wouldn't say perfect timing, but they're coming in there because the diversity that we're seeing within those product lines are growing every day. We're seeing, another huge, I'm not going to say the company, but another huge company coming out with crispy chicken that's not chicken, tastes like it. The burgers, we've seen the burgers last couple of years have really exploded.
yep.
And in a sense, it's really good for you too. And obviously, one could argue beef and plant-based back and forth all day, what's better and what's not. Um, but that I believe that industry is going to continue to grow. It's going to create some diversity, and I think you're going to see some
Yeah,
amazing innovation continue to rapidly grow because I think it's growing faster and faster when we look at plant-based options.
I think so. Another positive, I think, for operators is that you're going to be dealing with a clientele that is much more food literate than before the
Hmm.
pandemic.
Hmm.
I mean, when think about it, we have spent most of us, all of us, we spend more time at home cooking, learning recipes, learning about new ingredients. 20% more Canadians are gardening now. They understand that Mother Nature has limitations.
Wow.
That growing tomatoes is not that easy as they thought. I mean, think about your customer walking into your restaurant right now. having all that baggage, you
Hmm.
know, going through recipes and learning about this, learning about that, and then all of a sudden you go into that person will likely appreciate more the work being done back of
Yeah.
the house much
Yeah.
more so than before. And that, I think, Jay, you can charge
Hmm.
for. I mean,
Yep.
because and of course that change expectations are going to change as well. But I think you can capitalize on that shift related to
Yep.
expectations.
I fully agree with you. And I think there was something there that the value of what we determine is really shifting when we go out and dining. It's going to be the experience. The guest experience is going to be, I think, vital after this tidal wave of us opening up. Because I think there's going to be a tidal wave. Everyone's going to rush out. We saw this, I think it was the second wave. I say that because I don't know what wave we're in now, but it's the second wave, what wave we're in now. But the second wave, we saw everyone rush out and support restaurants. They all went, and then it softened a little, and then we had a third wave come in. But I believe after this, as we open up, there'll be this tidal wave. And I saw it even last night on patios around here in Alberta. They were packed.
Yep.
That softens as the water resides. And I do believe the value of what you're going to have to do today will determine how busy you are in the fall and winter. Do you see
I
that
think so.
happening
Yeah.
too? Do you see that happening as well?
I think so. There's more. The other interesting thing about the pandemic is that there's more democracy, I'd say, on both
Mm,
sides, demand and supply. So on the supply side, people have access to the consumer. I mean,
mhm,
let's face it, I mean, Cisco itself has sold to or is selling to consumers directly. Why? Because the supply chain is much more open now.
mhm,
There's more awareness on the demand side. Cisco had really most Canadians actually had no idea what Cisco did. They
mhm.
thought it was a software company.
Yeah.
Uh, they never thought of Cisco Canada as a food company in food service, and all of a sudden they can actually buy steaks and different products. I'm just using Cisco as an example just to show you how different rules are now. I mean, you're
Mhm.
looking at, I mean, Loblaws is selling meal kits from restaurants in the GTA right now.
Yeah.
Loblaws is no longer just a grocer, it's a broker.
Mhm.
So if you're an operator, you have to think about the new rules.
Yeah.
And it's pretty exciting when you think about it.
Yeah, and I think when you think of restaurateurs, I love that when you said new rules, because I think restaurateurs really have to adapt to that and really take a little bit of risks. But it is scary to take risks during these times. Would you recommend
Uh,
restaurants to really work on that, taking risks moving forward?
well, how do you like how do you mitigate
Yeah,
risks,
yeah,
partnerships, working
yeah.
together? Look at I mean, I know that some operators were upset with fees coming from different applications on people's phones. People
Mhm.
got together, they worked together.
Yeah.
You saw that in Montreal, in St. Catharines, Ontario, in some districts in Toronto. If you work together, because I know that a lot of restaurant operators tend to do that, but a lot of them have worked
Mhm.
on their own. If you
Yeah.
want to take on more risks, you got to work with other people.
You know what? That is huge advice because through this past year, we've interviewed a lot of restaurateurs that actually have done that. They've gathered together, they've cut
Oh
their
yeah.
marketing budgets by a fraction because they work together within marketing strategies to bring people in, sharing different ideas. It was actually pretty
And guess
incredible.
what, Jay? Right now, the food service industry has more sympathy
Yep.
from people than ever before. Municipalities have actually gone out of their
Mhm.
way to accommodate food. I've seen it like patios
Yep.
on sidewalks and on
Yeah.
streets. It's incredible. Use and abuse. This is the time.
You're absolutely right. It has brought a
Oh
life
yeah.
to our industry. And I do believe when you think about, a year and a half ago, we just were kind of, it was the industry. There really wasn't a disruptor that came into the industry for forever, really. And this has been such a big disruptor. And I think there's a lot of great things that people can learn and look at the silver lining from what it's given us. It is putting our industry on the map all the time. It's in the news every day. And I totally agree with you. It's bringing sympathy to our industry, to really allowing people to know, one, how hard it is to make it in the industry, but to really understand the cost, like the fractions of margins that our customers or restaurateurs make are very minimal. And this inflation part that's coming in here, it's a big hit to our restaurants. But it is a thing that we can get through it if we work together, share advice and share tips. I think this is the best time to look at all your business aspects of your industry. And we have a panel talk today on the show. We're going to talk a lot about that, because today you got to check your waste, like all these different things that we wanted to do, but we were so into the day-to-day practice prior to COVID. A lot of restaurateurs didn't really have the time to look at, menu prices or training or
It's
waste.
tough, absolutely.
Yeah,
But
it's very tough.
but the days where you have 20,000 items on your menu, I think are gone.
Yeah, I agree.
Yeah.
And especially with inflation. And I also believe digital menus today allowing us to switch items and adjust items. You need to play the game. I really, really believe
Like
that.
in Europe right now, more and more restaurants will have one item on their menu. If you're not happy with that item, you just walk away. Yeah.
Really?
Yeah, because of sustainability, food waste, and that's how they're able to be profitable. You go in, that's what you get. If you don't, then you gotta go somewhere else. And frankly, I think it's not for everyone, obviously, but I think I'm expecting more restaurants to operate that way here in North America.
Yeah, and if you're not, it's something to really consider and look at.
Yep,
really
absolutely.
Is. Awesome. Well, thanks again, and we're going to move on to Chris Elliott here right away. But thanks again, Sylvain. It's
my pleasure, Jay. And best of luck. And I want to thank the entire food service industry for the work they've done. It has done over the last several months. It's been incredible to watch. Thank you so much for feeding us, and our family will continue to order and visit your restaurants, your beautiful restaurants. So keep up the good work.
Awesome. Thank you so much, and all the best.
Take care. Bye-bye.
Awesome. Well, everybody, I don't know what to do now. Should we run a commercial? No, we'll just get right into it. Welcome, Chris Elliott. I'm going to say this right. Do you want to go off mute there, Chris? And I'll let you come in here. I just want to make sure I say this right. From Restaurants Canada, we have Chris Elliott, the Chief Economist. Economist. You've been with Restaurants Canada forever. You probably have a good parking spot. You probably have a good one. But welcome, Chris. I am excited to see you again. And you're going to share with us the state of the food service nation right now.
Absolutely. And thank you so much, Jay, for having me back again.
Yeah, it's an absolute pleasure. And wow, that was a lot of information that we just got. And I'm excited to see your presentation and share with us really what's happened and what's going to happen with our industry. And we're all excited.
For sure.
So I'm going to share my screen here because we got to do slides.
Economists love slides.
Yeah, so do you see it?
And charts and tables. So this will be fun.
Here we go. All right. So I'll be your slide guy. And we're ready to go.
Yeah. We'll just...
Okay. Just tell me to slide down, right?
Yeah, let's do that. Yeah.
There we go. There we go.
Can we sort of change the screen just so we can get everything in there?
Okay, you want everything? Okay, let me just pull this up. Just give me a second.
Yeah, just by way of background.
Oh, you wanted that part. You wanted that part of the graph?
Yeah, okay. I guess this is the whole point of today's presentation, is really talking about how the food service industry fell off a cliff last year. And I sort of used the analogy, fell off a cliff and broke both legs. And even though we did see a bit of a recovery in the summer months as patios opened up, what we saw again was the impact of a second wave. And even though sales have improved a little bit in March, the impact of the third wave is going to show up once we start to see the April and the May data. So overall last year, we saw the closure of more than 10,000 restaurants, caterers, and drinking places across the country. Sales were down by about $22 billion on a year-over-year basis. So it was just absolutely devastating. And so even though right across the food service industry, it was devastating for manufacturers, suppliers, restaurant operators, their employees. And at the same time, we saw such an incredible amount of innovation as restaurants looked for new and sometimes very unconventional ways to try and survive all this. So if we go to the next slide, we can just see what the impact has been right down to the segment level. And certainly early on in this crisis, drinking places such as bars, taverns, and nightclubs, they saw sales that were down by 90%, in some cases down 100% because they weren't even open. And with full service restaurants and drinking places opening up in the summer months, we saw fewer restrictions, the number of cases were falling, patios were opening up. So even with that, we never did fully return back to pre-COVID levels. Sales were still down in that 20 to 40% level. And then as patios closed, we saw an increase in the number of cases. We saw that decline in sales again. And things just are really not really returning back to where they were before. So even though sales are starting to improve in March because we saw a decline in the number of restrictions, overall food service sales remain well below pre-COVID levels. The one exception would be the quick service restaurant segment. So they were hit the least. Overall sales at worst were down 40% in the month of April. But because they could rely on takeout and delivery, throughout most of this crisis, sales have been down in that 10 to 12% range. And if we look at it even by day part, supper has nearly returned to pre-COVID levels for quick service restaurants. Afternoon, evening snacks have nearly returned to pre-COVID levels. And even though breakfast was one of the hardest hit segments during the beginning of this crisis, even that we're starting to see quite a dramatic improvement in terms of sales. Whereas with full service restaurant sales are really down, breakfast and lunch in particular, less so with supper, but still just not to where we've seen the decline that we're seeing in other segments. But if we go to the next slide, there is certainly hope on the horizon. So one of the ideas is that Canadians are still feeling very comfortable about going out to restaurants for takeout and delivery. They're very comfortable with ordering with drive-through. So that's sort of that top tier that they're comfortable with. They're also, and this is going into patio season coming up, they feel very comfortable being out on a patio, whether it's at a table service restaurant or with a quick service restaurant. Where it gets a little bit more muddy is there's still quite a bit of caution about going out indoors to either a table service restaurant. Only 39% of Canadians said that they would feel comfortable going indoors at a quick service restaurant. And then if we go into one of the areas where they're least comfortable, it's talking about a food court at a mall, and only 28% of Canadians want to go out to a bar. So there is that dramatic difference between the behavior in terms of why quick service restaurants are doing so much better than full service restaurants. But what we did find in a survey of Canadians in April is that they really miss going out to restaurants. They miss spending time with their friends and family at restaurants. They miss the food, the atmosphere, the idea of being served. They're really looking forward to getting back to normal. And it's especially that 18 to 34-year-olds that are most ambitious about wanting to go back out to restaurants, which is really exciting to see. Wow. So one of the things that we do here at Restaurants Canada is we do a lot of forecasting, and we use mathematical models to try and forecast food service sales. And as Sylvain was talking about earlier about the difficulty of forecasting, forecasting in a pandemic is certainly much more art than it is science these days. We look at things like disposable income, the unemployment rate, GDP, as well as other economic factors to try and forecast food service sales. Now, if we see on the next slide with quick service restaurants, this is an area where we're feeling much more optimistic about the recovery. Overall, quick service restaurant sales were down about 13% in 2020 over 2019. And although we did see a little bit of a dip in Q4 2020 and Q1 2021, we are expecting to see that food service sales are going to return back to pre-COVID levels around the fourth quarter of 2021, maybe even into 2022. And then we'll see that steady increase going forward. And even when we look at quick service restaurant sales, sorry, I mislabeled this as quick service restaurants. When we look at quick service restaurant sales in the United States, they're already above pre-pandemic levels. But where we see the slower recovery is in the full service restaurant sales, which is the next slide here.
Okay, let me just bring that one up, Chris. There you go.
So quick service or full service restaurants have been hit much harder. We see the dramatic decline in Q2, a little bit of a recovery in Q3 of 2020, and then of course as the second and the third waves have hit, that sort of decline in food service sales again. So it's really in the first half of the year, because of the third wave, food service sales are going to struggle. But with the increase in the number of vaccinations, with the opening of patios, with the decline in the number of COVID-19 cases, people are going to start to want to go out to restaurants again. So overall in Q3, we're anticipating that sales will grow to about $6.6 billion, but we're not back to the $8.7 billion that we had seen prior to COVID. So we're not expected to see that until about the fourth quarter of 2024. And that's because although we're going to see a lot of pent-up consumer demand, I mean, there's no question on that side of it, what's really pulling back this is a slow recovery in the number of international tourists coming to Canada, as well as business dining. So because those are expected to take longer to recover, overall full-service restaurant sales aren't going to recover fully until 2023. So if we go to the next slide, we can see overall with commercial food service sales. So in 2020, sales were down by 28%, and that's that $22 billion in lost sales. Not much of a recovery in 2021, and again, it's largely because of that weakness in the first half of the year. Things are really going to start to take off in the second half of the year, but it's not until 2022 that we see that full annual increase in food service sales. So we're near back to pre-COVID levels. But it's once tourism and business dining return that we see the food service industry return back to pre-COVID levels, and then we'll see that steady growth going here on forward. But it really will come down to what happens on the consumer side. And let's talk about disposable income next. So this is unlike any recession that we've ever had before. When we've seen disposable income in a recession in the past, because of the dross in jobs, we would always see a dramatic decline in disposable income. But because of the number of government programs to help support Canadians, such as CERB, we saw actually a big spike in disposable income, rising almost 15% above pre-pandemic levels. Now, as employers start to hire again, we'll see employees go back to work. There'll be less reliance on a lot of those social programs, and we'll see a steady increase in disposable income going forward. But let's contrast that with expenditure, and certainly household expenditure on all goods and services on the next slide. So we saw a significant decline in household spending in the second quarter of 2020. This is largely because it was no place to really spend. So the demand was there. There was just no place to go out to because of closures. But once the economy started to open up, we saw a fairly quick recovery in the overall increase in household spending. And the Conference Board of Canada is predicting that household spending will return back to pre-COVID levels around the fourth quarter of 2021. Now, there's going to be some industries that have already recovered, such as grocery stores, home and healthcare stores, home renovation stores. But then there's the food service industry, which will take longer to recover. But what I want to really pay attention to is that gap between the yellow line and the red line. So the gap between what you earn and what you spend is your savings. And in the second quarter, the savings rate was 27% of disposable income, which is basically a record high. Typically, we would only see household savings of about 2% on a quarterly basis. And so the big question then becomes, with that big gap all throughout these quarters, what's going to be done with all that pent-up savings? And the Bank of Canada has been doing a number of studies, and what they found is that for the vast majority of Canadians, this is not something that they're just going to go out and spend. In fact, about 50% said that we're either going to save it as precautionary savings because there's still a lot of uncertainty out in the marketplace, or they're going to help pay down their debt. And even prior to COVID, we all know that the debt levels in Canada were just unsustainable, 173% of disposable income. So what this chart is telling us is that we're not going to see this roaring 20s. Certainly there's going to be a lot of pent-up demand. People are going to go out to patios this summer. We're going to see some strong sales, but certainly not an extended increase in food service sales going forward. People are still going to be cautious about their spending. So it's going to be interesting to see how consumers behave going forward, and if they actually are doing the prudent thing of saving and paying down debt, or are they going to just go out and spend it? We go to the next slide. Economists always have their favorite charts and numbers, and I think this is probably mine, not because it's a good thing. The stringency index is an indicator by the Bank of Canada, which measures the impact of the pandemic through government shutdown measures and government restrictions, such as school closures, workplace closures, and travel bans. And the higher the index, the more stringent the shutdown measures are on the economy. And the reason why this has been a valuable tool for me forecasting is because the economic indicators don't fully explain all the trends that we've seen over the past 14 months. What we have seen is when we include this in our model, it fully explains the trends that we've seen for full service restaurants, for drinking places especially. And so as the stringency index or the government restrictions are increased, we see a dramatic decline in sales for full service restaurants and drinking places. And as those restrictions are relaxed, we start to see an improvement. Now, with the third wave, restrictions are certainly at an all-time high, and what we expect to see is that going forward over the rest of the year, that stringency index will slowly fade down. But there will still be some stringent, especially in terms of travel bans, that are going to take place throughout the summer, probably into the late fall. So what we're doing is really watching what's happening here, because that's going to indicate what happens with the recovery in food service sales, really regardless of what goes on in the rest of the economy. So if we go to the next slide, we talked about some of those uncertainty elements, and certainly one of them is global tourism. So the OECD is predicting that global tourism is not going to return back to pre-crisis levels before 2023. It could be 2023 or 2024, depending on what happens in the rest of the globe. And this matters because overall, international tourists spend about $4 billion in sale on food service when they come here. And we're looking at forecasts by Destinations Canada. And even though they're going to see a bit of an increase in domestic tourist spending this year, its international spending by tourists is going to continue to decline in 2021. So it's really not until 2022 and 2023 that we start to see that recovery in tourism. And certainly probably one of the biggest unknowns is on the next slide. And this is really to do with consumers. And this has a dramatic impact on food service sales. It's one of those things that's kind of kept me up at night wondering what is going to happen. The president of Global Workplace Analytics is predicting that 25 to 30% of the workforce will continue to work from home multiple days a week by the end of 2021. If we go to the next slide, I'll show you why that matters. So back in March, I'm in downtown Toronto, and if you're familiar with the underground path in the financial district, prior to the pandemic, around noon or 12:08 p.m., this would be just wall-to-wall people. And when I took a walk along there, it was an absolute ghost town. I saw maybe one or two people. There are some kiosks that are open, but the vast majority of them are closed. And this is largely because people are now working from home. And the big question then becomes, if they continue to work from home, how does that impact the operators down there? But how does it also impact those day parts? Because if they're not making those commutes, are they going to be having breakfast and lunch as much as they used to? Or are they going to be relying more on supper? So I don't think this is going to change overall food service sales, but it does change where they're spending those dollars. So instead of spending them downtown in the downtown core, those dollars are now being spent out in the suburbs. So it's going to be interesting to see how much of a recovery we see in remote workplaces. And any of the studies that I've seen have talked about how Canadians love working at home. And they really just want to stay at home, or at least only come into the office a few days a week. So this will have a dramatic impact on overall food service sales. If we go to the next slide, we can look a little bit ahead in terms of, we ask Canadians when do they expect to return back to restaurants again, and to specifically go back to a table service restaurant. And it's great to see that 24% of Canadians are very comfortable now. And another 16% said they're going to go out as soon as the restrictions are removed. So really within the first half of the year, about 45% of Canadians are ready to go out to restaurants. And another 11% said they're going to go sometime within the rest of the year. But if we go to the right-hand side of the chart, we can see that there's about 31% of Canadians that are waiting to either get a vaccination or they're waiting for herd immunity. And so there's still going to be 3 in 10 Canadians that are going to be very cautious, perhaps sitting on the sidelines before they're willing to go out to restaurants again. And then we even have another 6% that said, you know what, it's not something I'm going to do until sometime in 2022. So there's certainly a lot of enthusiasm to go out to restaurants, but it's really going to be determined by certainly the stringency of the restrictions that are out there, but also how quickly we can get people vaccinated. And on the next slide, we talk about in terms of when it's safe to do so. It's great to see that 26% of Canadians are going to go out more often versus 15% that said less often. And when we break this down by age group, it's primarily the young people, the 18 to 34-year-olds, that are most enthusiastic about going out. And then finally, we talked about menu prices and menu inflation. And Sylvain talked about this before, and we're not seeing a lot of menu inflation right now. And again, this is data that's collected from Statistics Canada, where menu inflation is about 2.5, 2.8%. But what we are expecting to see is that menu prices are going to rise for the majority of people anywhere between 3 and 6% over the next 12 months. I think it's a little bit of a moving target in terms of when we start to see those increases. But much like the US, when there was this rapid reopening, the supply could not keep up with the demand, and that came for both the food side as well as the labor side. So certainly when restaurants reopen, they're going to see higher food prices just as the demand starts to grow, but also in terms of labor cost. There's been a lot of challenges in the US trying to bring back labor. And so you have restaurants that are now in the US saying, we're going to raise minimum wages to $15 an hour by 2023 or 2024. Or they're offering signing bonuses. And I heard one operator, they were offering a signing bonus of about $1,200 to employees if they can bring in a new hire. So certainly on the inflation side, this is an area where there's still quite a bit of uncertainty. And as Sylvain alluded to, there's so much forecast challenges when it comes to menu inflation. But what's interesting is we also have another 17% that said, you know what, we're going to have to raise prices because we've been so in debt from this crisis. And so to try and recoup some of that, they're going to have to raise menu prices by more than 7%. So it's going to be a very much an interesting indicator to watch going forward. Wow. So just to summarize, and then we can sort of open up to a bit of a discussion, quick service restaurants were forecast to return to pre-COVID levels, if not by the fourth quarter of this year, certainly in early 2022. With full service restaurants, it is going to take a little bit longer to recover just because we're not going to see that growth and that fast recovery in business dining and international tourism. But generally speaking, there is a lot of enthusiasm out there, and certainly people are going to want to go back out to restaurants again. And certainly there's a lot of interest to get back out to table service restaurants, spend time with friends and family again, and just enjoy things like the way that they used to. So there is a light at the end of the tunnel for this. It's been a very dark period for the food service industry, but I think just as we get into the summer, I think as weather warms up, we're going to see some really strong growth in the industry, and can't wait to get back out again myself.
Wow. Well, thanks, Chris. I don't even know. I have like so many questions, but what I'm going to do is I'm going to bring in the panel, and if you can stay a little bit, I think the panel has questions because I saw a lot of them taking notes there in the green room. What do you, when you look at all these things, and I think one of the things what you said, Chris, at the beginning is really, how do you read the tea leaves, in this changing world? It's almost day by day as we plan and strategy out to our restaurants. What is that one thing you would say to an operator right now that is eager to open up and they're about to open up that they need to be focusing on from your perspective right now?
There has to be a flexibility. And I think probably more than any other time, because there's that flexibility of opening and perhaps being told to close again with 2 days notice, like they've done in some provinces. But in terms of having that flexibility with menus, we're not going to see that return to 120 items on a menu anytime soon. So one of the areas where we've talked to operators, and that's an area where they're going to continue to go back and move forward, is to trim the menu so that we're not seeing those 120 items. They want to specialize in what they're really good at. And part of that flexibility also means meeting consumers where they are, which is on the digital side, on the delivery side, because that's not going to change. And I think in terms of what the restaurant industry looks like after all this is done, I can see the restaurants shrinking in size where they don't have as much on-premise space as what they did before. But certainly in the short term, a lot of it has to do with that flexibility of providing quality food that can be delivered, because some food can't be delivered very well. And we talk with consumers, and one of the things that's most important to them on delivery is that the quality of the food is there. Pricing is important, but it's the quality of food that is so important when it comes to the delivery and that experience of delivery.
Yeah, and I cannot more than agree with you on that. I think quality of food, I think the service and all service industry that provides service is going to be really, it has to be a top of its game, and it's going to be difficult with like you said, the labor, increase in minimum wage, all these different factors of how to get the best of the best staff and how to train them and deliver that experience. It's really playing your A game on top of your A game in everything you do within this industry. Not saying that people weren't before, but there was a lot of operators that were busy just because we've seen an increase in people dining out more and prior to COVID. But now it's really playing your A game all the time on every area of your business. It's incredible. It really is. So what we're going to do is, Chris, you want to stay and join this talk? Because I think there's a lot of questions for everyone that we're going to bring up here. We got a stacked panel that's going to now provide some solutions now that we rattled everyone on the both presentations that we just saw here. We're going to bring in a panel talk, and then we'll talk about some solutions that operators can do with some of the best industry consultants, experts. I don't know if consultant's the right word, but some people like that word. I know Jim Taylor doesn't. But we're going to bring them in here in a second and really share some tips and stuff that you can do right now to get ready as we open back up. So we're going to break for a 30-second commercial and we'll be right back. Okay, Chris?
Not knowing when your Sysco order is going to arrive makes you feel not great. That's why we created Sysco Delivery. The Sysco Delivery app lets you know where your truck is located, when it's going to arrive, what items will be arriving, and what's happening throughout the day at all of your locations. No need to look at your phone repeatedly throughout the day. Enable notifications so that you are notified whenever there's a change in delivery, estimated time of arrival, or delay. Download today to get a real-time view and updates about your Sysco delivery.
All right, so welcome everyone. We're back here with a panel. We're like this heavy stacked up panel of the experts. I believe you guys are like the best of the best, and that's what we do here on SVK. So anyways, who we have, and you can kind of wave or give a nod, is we have Andrew Scott here. He is the I'm going to try to get this right, guys, and I apologize. This is like one of the things I am not good at, but the multi-unit growth coach, owner of Shift Training, Andrew Scott is in the house. Did I get that right, Andrew?
Owner Shift Training, yeah. Not the owner of Shift Training, but owner Shift Training. But yeah, training. That's right. Thank you.
At least I didn't say Scott Andrew.
Well, wouldn't be
that was the last show. That was the last show. All the way from Vancouver, we have Jim Taylor, owner and president of Taylor Co. Consulting, creator of Benchmark 60, which is really reinventing the whole industry. Welcome, Jim. Awesome.
Thank you.
And also, you're making a lot of noise on LinkedIn and everywhere else in the industry, so welcome. Peter, where are you?
Right here.
Peter Van Thin, owner and developer of Foodservice Unboxed. One of the we have him on the show all the time. You might have seen him. He's a huge influencer and just a wealth of knowledge. So thanks, Peter.
Thank you very much.
Awesome. Barry, all the way from down in the US. Now, Barry, you have like the biggest title. So anyways, he's a professor at the School of Business in North Carolina, editor, associated publisher of Restaurant Startup and Growth magazine for restaurantowner.com. Barry, always a pleasure to see you and welcome as well. And you guys can unmute yourselves if you want as well. And then Chris is over there. All right, so let's get started here. A lot of information we just took in there on those both presentations. I have like a million questions, but Jim, you have a question here for Chris to start off.
Yeah, I do. Thanks, Jay. Chris, awesome information. I think, the more we can see that kind of stuff about what's predicting or what you guys are predicting is going to happen in the industry is, I think, really helpful for everybody. There's some good comments in the feed too. I have sort of one specific question for you because I hear this a lot in the market that I work in and with clients and whatnot, but seeing some of that recovery come back, you were talking about specifically in the full service restaurant. I keep hearing about how many people are staying longer in restaurants. They're wanting to spend more time with people they haven't seen in a long time. Restaurateurs are talking about how much time do I give, the old you're kicked out after 2 hours if you make a reservation type thing. They're looking at that information. So do you think that growth is going to come back specifically in customer count, or is it more, how much of that is going to come from just people spending more when they do go out?
I think it's going to be a combination of both. They haven't seen friends and family for quite some time, and so when they do spend, they're going to spend more, and part of that's going to be on alcohol, appetizers. And part of that is it's that indulgence side of it as well. A lot of them are just tired of cooking, or they don't want to cook and clean up. And so they're going to go out and enjoy on the spending side. In terms of how long they stay, I think there could still be a bit of a challenge on that just because of the reservation side. It depends on what the capacity limits are for restaurants. So if it opens up wide like it has in the US, I think people will stay longer, where if it's now restricted to 25 or 50% capacity, then that's when those restrictions are still going to be, okay, you can stay for an hour and a half, but then you have to move on.
Yeah.
But what they may do is go from one restaurant and then over to the bar across the street afterwards, just to have fun. But I think that there's still going to be that dynamic within the food service industry.
And inflation complicates the average customer spend because pricing's going up and those types of things. But I'm curious to see how much of that that sort of return to spending comes from. Is it more customers going out, or is it customers spending more money? It's an interesting dynamic, I think.
Yeah, for sure. And I do see it as being both. And the big unknown in here is if we do see that 10 to 12% inflation, let's just say, what would, that brings us back to that full recovery a lot faster too, just because of the inflation as opposed to because people are going out more often.
Yeah, it's going to be interesting to see, that's for sure.
Absolutely. So first of all, great talk already. But I do have a few questions here for the panel. So here we go. So we heard from both labor and menu. I want to talk menus right now because a lot of operators are out there. I do believe, and I have seen a lot of menu adjustments. But what would your take be, and please jump in here, on what operators need to do with, we know food inflation is here. It's coming, it's growing, it's moving bigger and bigger, as we've heard. What would you say to operators now when it comes to menus? First thing to do. Who wants to jump in?
I'll weigh in here early, Jay.
Okay.
You're looking at your prime cost, and I know you're focusing on cost of goods sold, the menu side, but you have to look at what changes you make to your menu are how it's going to impact labor. But you can't control what's going on in the economy, particularly as an independent operator, or the labor market. And you're going to have to rely on some old school management practices that the best of the best have been doing for years and years. And inventory control, menu engineering, what's selling, what isn't, what can you increase your prices on, what do you need to get rid of. There's issues with cross utilization. What are you bringing in? And I'm going to say something regarding, the broadline distributors, because of their advances in technology, are in a really great place to help the independent operator with inventory control, not overbuying and hurting your cash flow, but essentially keeping enough inventory in stock to serve your guests. And then you had mentioned this, and our previous experts mentioned this, waste. There was a time when, if things were okay, the margins had always been tight, but that you could get away with not optimal practices in the kitchen. You can't afford waste anymore. You just can't afford it. You can't afford not to be looking at your P&L every few days. You can't afford not to be doing cash flow management. If you are in the restaurant business right now as an independent, you are going to have to raise the bar on your game in terms of finance, and you raise the game on your bar in systems, and then training and onboarding. There's no margin for error. Now I'm going to leave it at that. And I want to hear what some of the panelists on the front line, what they might add or even contradict on those particular words.
Well, I guess from my perspective, I can jump in here, Jay. There's a couple things that I've been repeating a lot for my clients that I'm working with and friends and colleagues in the industry, especially when you're a smaller restaurant owner. I keep having to tell people, you're running a business, not a charity. And everyone is so worried about raising their prices, but the reality is that is a necessary component now. We have to do that. We have to go back to actually raising our prices. We can't afford to, lose out on profits. Like if you want to run a charity, great, but that's not why we got into business. So first and foremost, we've got to get over that psychological barrier to that, because that is the reality and everyone is going to do it. That is just the way it is. Now, having said that, along the lines of what Barry was saying, we need to go back to basics. The stuff where we relax and we were trying to be easy on people because, it was the pandemic and so on. We probably let a lot of things go that maybe we couldn't, or maybe we got in there and did it ourselves. So that's the way we were able to keep margins lower. Those same tactics aren't going to be able to be transferable to where we have more employees in the mix now. Sales are higher. We actually need to level up our own skill sets and actually watch what our people are doing. We need to make sure that they're tight and there isn't waste and that they're serving people properly. Like that's just the way that we need to shift our perspective moving forward, because the same things that kind of got us through the pandemic won't get us through this recovery period is the way I look at it.
I'm with Andrew 100% on that. The number one thing people have to do is to not succumb to the fear to increase and raise their prices. And you think of it this way: it might be 5% now, but what if it goes up again? It makes it very, very difficult for a small operator. If you think it's hard to raise your prices by 5% in the first place, imagine if you have to raise them by 10 all of a sudden, and then you've got to get caught up. And then not only are you getting caught up for the money that you got to pay for your goods today, but you're getting caught up for the increase you didn't take before. And that creates an awful lot of issues. The other thing you have the opportunity to do as an operator today is to reinvest in your labor and start selecting the type of labor that you're bringing into your restaurant. As people begin to go back to work, you may be able to hire different cooks who have more skills that can do other things for you in the restaurant. So things like make newer types of menu items and help you re-engineer your menu and create more offerings that are going to bring people into the front door, because that's also going to be important.
I want to jump in here really quick here, because I got a question for Jim on this, because Jim, you're dealing with frontline and you also look at things a little bit different than everyone else. So I'm excited that you're bringing this new world knowledge to our industry. But I want to talk to just Jim on this. Is Barry and Andrew and Peter really said really good points here around menus. I want to talk about menus. Jim, what's your advice and stuff when it comes down to the technical because we've been telling people adjust menus, make it smaller, this and stuff. But then I go out there and I still see these large menus out there. How can we get the operators to do this? Like because there's, first of all, they're hearing Cisco, they're seeing our show, they're seeing me telling them repeatedly every few months, change your menus, change your prices, increase them. What's that first step that we can get our operators to do right now from your perspective out there?
Well, I think the biggest challenge with getting the industry in general to buy into the concept of running a smaller menu is that the menus are made by creative people that want to put new exciting dishes on the menu, right? And I think that the more we can spend time with restaurateurs, educating them on just how to understand the information that's there, things like Barry was talking about waste and looking at things like even just understanding how your menu is actually costed and educating the industry on how to make decisions based on that information. And I think the industry in general our industry is so far behind when it comes to understanding how information can help us make decisions. And this pandemic has really, I think, the thing that is maybe a silver lining that I see that's happened is it's created so much evolution and innovation in terms of so many parts of our industry, which is incredibly exciting. And, I just hope that there's, on the back end of that, operators realize that the more information they have and the more they can understand the data around what's happening in the business to help them drive decisions, that's a way for us to help them get there.
Absolutely. So, and thank you. And the other thing I'm here is what I'm really worried about. And I'm thinking about this all the time now. See restaurants get really busy with this first tidal wave of people going back out. What should operators be doing right now to get ready for that when it comes to their menus? Should they review it? They've looked at everything. They've cut it down, done all the things they're supposed to if they hear from everyone out there, all the experts telling them. What is that one thing you would say right now, getting ready for July, that you need to do your menu? Should it be changed by now? Can you wait a little? What should you be doing? Who wants to jump on that one?
Hire early, train early, because you're going to get hit. That's all I'm going to say.
Yeah.
But is operators going to have time to look at this stuff, your menus, and do all these things that we're telling them? Do they have the time right now when they open back up? They won't have the time is what I'm thinking.
Yeah.
Would you guys agree?
If you look at what Barry and Barry being in the U.S., like what they're experiencing in the U.S. right now is all of a sudden, because of continued unemployment benefits and a surge in business, everyone is hiring. And what they're experiencing is a labor shortage in the market. And there's a huge inflationary pressure on wages there. And so in Canada, specifically, what we need to be doing right now is hiring now and getting ready. And that's what I keep telling all of my clients, even if you were still in a lockdown or a shutdown. We need to start early, because pretty soon you are not going to be able to find people when every single business is hiring and when there's a reduction in the people looking for jobs. So it's this really weird scenario where we actually get advance notice of what's going to happen because it's happening in the US right now, and we can anticipate the same things here. So even beyond your menu, the reality is that we need to make sure you have enough staffing to even be able to keep your hours open, because I've seen a number of restaurants in the US have literally closed multiple days a week because they don't have the staff. And I think that's the real thing that people aren't understanding right now.
Yeah, and Jay, I think, Mike, just to add to what Andrew's saying, it is a very strange dynamic happening right now in the labor market. And it's, operators are faced with this: do I invest money now to hire and train people thinking that I'm probably going to get busy, or do I wait and see what happens and down the road not have enough people ready to even open 100% of my business, and then I lose money anyway because I can't generate revenue? It's a really strange dynamic that's happening in the industry right now.
So let's so we have food inflation is impacting. That was the theme today. Is this food inflation, and we're going to see labor? What's the profit percentage is going to look like? Chris, you used to always say 4.5% net profit before taxes. Is that going to shrink down to like half of that when we look moving forward?
So it already has, and this was even before COVID. So the latest data that Stats Canada put out, the average pre-tax profit for a restaurant operator in Canada is now 3.8%. For a table service, it's 3.1%. In Ontario, it's even less than that. So during this whole crisis, we've been tracking operators, and more than half of the industry are currently operating at a loss. If you add the other 25%, so about 75% are basically breaking even or operating at a loss. And a good 70% of operators say it's going to take at least 12 months or longer to return back to profitability.
Wow.
So they're balancing those costs, but at the same time, they're facing higher expenses, higher insurance fees. Rent still continues to climb. Labor's rising. Food costs are rising. They can't absorb that. But at the same time, how much can you pass on to consumers? And I think right now there's some flexibility in terms of how much you can pass on to consumers. But the warning would be, go back to 2018 and what happened when you raised menu prices by a significant amount. And at that point, that was because of the minimum wage increases in Ontario and other provinces. Well, that's when traffic started to decline at restaurants. So I think we have a small window of an opportunity that consumers are accepting price increases, but I think we have to be careful about how much we can take advantage of that.
Yeah, and I can add in there too, because I did this post on my social media the other day that just said, it was brought on by one of my clients who was on a show in Carolina, I think it was, just talking about what do we do, because now labor is rising, food prices are rising. What do we do? Either I pay them more and I lose money, or I don't do it, I don't have any employees and I lose money anyway. And so I think a lot of operators are feeling trapped. And so I said, hey, well, actually, let's look at the data, because we're business owners. We need to actually look at the data. We can't make willy-nilly decisions. So I literally did the math, came up with a spreadsheet and posted it out on my social media. There's like hundreds of comments wanting it. But the reality is you don't actually have to raise your prices as much as you think you would. Like that's kind of like actually run the numbers. So an example here, to raise wages by $1, say if you're at $14, you want to raise them to $15, you actually only have to raise your average menu price something like 23 cents. Like, it's actually not as much as we think it is. So we actually have to go through and do the data based on your labor and your food costs and actually get the actual numbers. And so I don't want the fear to stop people from actually doing it and shooting themselves in the foot. So actually get the data. That's basically what I need to mention here.
Well, sorry, go ahead, Peter. Go ahead.
Plus, your labor is an investment. You can then use that labor to perhaps produce more diversified and interesting menu items that'll help bring people into the front door. Or you can create different types of efficiencies. You can use that. If you bring in skilled labor, someone who, people that suddenly know how to, say, cook brunch, for example, and you can open a day part for brunch and use that as an outlet to start to sell off some of the leftover items that you have in your kitchen that can be repurposed, like, I don't know, pre-cooked sausages and stuff like that going into omelets or whatever. Then your food cost actually starts to come back the other way, because you're being more efficient in how you process, use, and market the food.
I like what you're saying a lot, and I've been talking to a number of independent operators who are doing okay with all the stresses that are out there. And the word that keeps coming up in terms of labor is culture. At some point, you're going to have to raise your wages, but to keep and retain your good employees and to get them on board with all your efforts to reduce waste, to be innovative, to improve the guest experience, you're going to have an operating culture where people want to come to work, where they feel like they're involved in something bigger than themselves, particularly for younger Gen Z and young millennials. That's critical, and training, onboarding, attitude. And I'll just leave it with this: hire the best general manager you can afford, who gets it, who understands it, who's a good coach, good leader. And that allows the independent operator to work less in the business and more on the business, marketing, menu analysis, all that other kind of thing. So I'm really just saying amen to your comments.
Well, may I ask you this, Barry, though, what about the flexibility? How do you look at the flexibility of the type of items that people are starting to buy? I know that we've always loved selling value-added items, which is great. But sometimes you have to find that sweet spot between something that's highly value-added, but also something that's flexible and could be used in a number of different ways. You're in distribution, maybe you could share some thoughts on that.
Yeah, I had that conversation yesterday with Chris Tripoli. He's a veteran consultant on this particular topic, and he said, yeah, there's going to be smaller menus. We've all agreed that we're seeing that trend. It doesn't mean just because you have a smaller menu doesn't mean it doesn't have to have variety in what you're doing. And even with a lot of cross utilization, you can offer your guests a lot of different options with a smaller menu that make it interesting and create variety, and offer that, offer a sense that there are choices, even though it is a smaller menu. And so I think, the creativity in the back of the house, the creativity in terms of how you're presenting your food is all going to be part of the guest experience to make them feel like, hey, I've come here. Sure, there's fewer items, but boy, they're interesting. There's something here for me.
I hear. So what I saw on LinkedIn, I think it was this morning or yesterday, there was a huge operator that said, this is what we've done over the last year and a half. And they cut their labor by X amount. They cut their food costs. They've done all the homework that, in a sense, Barry, what you've been writing about for the last 15 plus years, finally people are doing it and they're doing these activities. It's very, I guess, I don't want to use the word exciting, but very, I guess, nice to hear that people are starting to do these things or taking the time to do these things. But one of the things I want to really touch on is what Peter was talking about, is this value added products, because it always tends to be a little bit more. But I don't think the added value products costs are going to even come close to what a labor cost increase is going to be, or your waste, all these things. So I think that is definitely an area I think operators need to look at that maybe not considered value added products before, but definitely should look at it today. Would you guys agree on that?
Well, yeah. I mean, you have to be managing the top line and bottom line simultaneously and aggressively. There is no. We just talked about what Canada is looking at in terms of the predicted margins for fine dining and quick service. That there is no margin for error anymore, none at all. So it's an unforgiving environment. But those operators who are paying attention to those things are going to be the successful operators, just as they have been in the past.
Yeah. Jay, we talk about this all the time when we're on Foodservice Unboxed. If you are saving labor through value added, then it's a question of selecting value added that takes out certain types of labor, because anytime you're taking labor out of something, you can use that labor to produce something else. So it's all about the level of skill. So, try and choose a value added item, like some of the ones that we reviewed that are going to have a lot of menu options themselves, or that are going to open doors for your client base as well.
Innovation. I want to talk innovation right now, as we see a lot of companies right now are coming out, and we can also expand on it. I want to talk about innovation, but we can also touch a little bit on the innovation around plant-based products. As we heard, obviously, we're seeing this increase substantially over the last couple of years, but even growing even more right now as people are pulling away from the proteins and using a lot more lentils and different grains to replace proteins, animal proteins. But I want to talk about innovation first. I want to ask you guys this question: how important it is for operators right now to look at innovative products for their menu, not just labor value added, but innovative. What's your take on that?
Well, I'll step in on this one. We've just finished a survey of Canadians, and one of the most innovative things that's happened in the food service industry, really throughout this pandemic, is that we've seen restaurant operators start to go to meal kits as well as add groceries. And before the pandemic, what we saw is sort of that shift between grocery stores looking more like restaurants. There was a rise of the grocerants. And what this pandemic has done is really shifted that pendulum all the way in the other direction, where now if you go into a restaurant, it looks like a grocery store because they're selling groceries or because they're selling these meal kits. And when we talk to both operators as well as consumers, there does seem to be quite a bit of an appetite for this. It's not a one size fits all, so every restaurant should do this, but certainly there is a niche market for restaurants to look outside traditional delivery, takeout, on premise to expand into selling a signature sauce that they couldn't sell before, or doing the meal kits where a lot of people in Canada just want to be able to have and create that meal at home and prepare at their own time when they want to. So I would say that's one of those areas of innovation that we've really seen throughout this crisis that I don't think anybody really could have predicted 2 or 3 or 5 years ago.
Have you gentlemen seen in Canada an uptick in really smaller operations getting successfully into food retailing? I've been amazed at some of the operations I've talked to that 2, 3, 4 units that somehow developed relationships with retailers and now are selling their product through grocery and supermarkets. There seems to be resources out there to streamline that. What's your take from your perspectives?
I can chime on on that quickly. I think that, what I've actually, everything from having discussion with friends and colleagues in the industry to all the way to clients, is that even those small restaurant groups that have only a couple of locations, that sort of regional mid-market type group, they still have usually, I would hope that they have some signature dishes that people are going to come there for. And my encouragement and challenge to either those people that are listening or people that I've worked in the past is there's opportunity outside of your 4 walls if you have a dish that people come there specifically for. So, I think that it is starting to happen, and like Chris was saying, there are ways to do that, right? To get your sauce or your dish or your meal kit or whatever out into the masses outside the restaurant.
Now I have a question for you. So if we look at those the restaurants that are bringing in retail or selling it to grocery stores, will that offset some of this inflation that we're seeing that they'd have to cure on their menu because they're able to sell it in a retail format? Would that offset, if you at the end of the day looked at your books, would that balance your books a little bit more with food inflation that's coming or here?
I don't think it necessarily battles the inflation, Jay. I think what it does, though, it helps them battle their labor cost because it's revenue that really doesn't take much effort to generate.
Very good. Good answer. Got me on that one. Perfect. So I want to talk also just briefly before there was another thing I forgot to ask. And we're talking about, and Andrew, you made a really good point about it. When you look at increasing your menu and operators out there are like, okay, it's always the dollar more, right? Everyone did that before, right? We'll just put $1 on everything. I have done this in the past where I've also helped operators drop prices in some products and then to increase demand on that product. And I always, merchandising the menu in a sense, this price for this time. Would that be something that operators could also consider, not just increasing a price on everything, but also looking at some products that you can drop some prices on to generate more volume? Because there will be the corporate chains out there. We've seen burger wars back in 2008, whereas who could drop the lowest price in burgers to generate more demand. Do you think operators will be able to even drop some prices in some areas and be merchandising or bring in new products? What do you guys take on that? Anyone? Andrew? Jay, what did you just say? No.
I think if you do that, you're playing the wrong game. That's my take on it.
Okay.
I can understand it, and I talk to, so my base is QSRs, and I've seen people try and play the game of the lowest price and the race to the bottom, and that never benefits the owners. This is my perspective. So I think we're asking the wrong question. The right question I think we should be asking is, given that scenario, if we want to increase volume, how can we make our product and our experience so good that the pricing then doesn't matter? How can we make it so unique so that we are the only competitor in that market realistically? So that's the right question we have to ask. How do we make something so amazing, so unique that we can stand out? because a race to the bottom and competing only on price is never a game that you can win, because there will always be someone who can somehow undercut you, and that's just not a game that you can effectively play over the long term and win.
The major QSRs kind of taught us that lesson with the dollar menu, basically teaching consumers don't pay more than $1 for this ever again.
Yeah.
And the happy hour game in Canada has done the same thing. It's a race to the bottom to see who can charge the least, and it doesn't work.
Perfect. Well, that, first of all, thank you, because great advice out there. Because I have to agree with you. You don't want to get into that game, because someone always undercuts you a little bit. It was the chicken wing thing. It was the chicken wing thing a few years ago. Who had the lowest chicken wing prices, right? And then you got down. It was like this little hair of meat on a bone, and you could sell it for 5 cents or 10 cents, right? Like, it was just, and I believe that's going to hurt you in the long run if you are considering getting into that game, because consumers, as we saw from all the presentations today, the value of what people are looking for, all these things add up that you have to play the game right. And you don't want to get into that.
Well, it's the value proposition too, right? Like, what I talk to, other colleagues of mine about as well is just, being from a quick service. So we're selling sandwiches as my background. So I'm saying, if we are selling a $10 sandwich but providing $5 service, that becomes a negative value, which we will lose customers with. But if we have to charge $12, well, then we better be providing $20 service, because that differential is the value that we provide to the customer. So if we can provide a $20 product and $20 service for $12, it's a no-brainer equation for the customer. But if it's the opposite, that's really what we have to focus on. And I find that when you reduce prices and you are tight on margins and you're afraid to raise your pricing, you try and cut in other places, which only then kind of compounds and actually negatively affects the value proposition that you have for your clients. So all of a sudden you might, have a $10 product, and then you cut your labor, so therefore wait times increase. Maybe you cut the amount of, you penny pinch and don't serve the quality of product or the amount of product, and then that just all of a sudden trickles down and negatively affects your reputation over the long term. And that, again, that's just not the game you want to play. So focus in on value, focus in on what you're providing to the customer, and if you have to charge for it, charge for it. That's my 2 cents on it.
Yeah, if you have to take prices up, give them something to go with it. That's going to entice them to see that they're getting something for that extra that they're paying. More interesting menu items, things like that. And I'm familiar with the theory that you're talking, that whole average cost up pricing model that people will do with full meal deals and all of that. I mean, you have to be able to engineer it so that two things can't change. One is you can't be forced to hire more labor to deal with that extra volume, because then all of a sudden that affects your P&L. And then whatever you put on special that's going to do that work for you, it has to be something that really, really, really brings in the traffic. But it's not necessarily it's not really one of my favorite strategies.
And it's been mentioned already. We're in an environment where, in general, it appears people are rooting for the operator, rooting for the independent operator. They want you to succeed. They understand the challenges. And part of that value add, whether it's they're picking it up as curbside or they're sitting down, they've got to feel that their presence is the most important thing in the world to you, and it means a lot. And I think that's what's going to keep you with guest retention, with returning guests, which you cannot succeed in this business with one-off guests. You have to have that person who's going to be there once or twice a month.
Totally agree. Okay, so 30 seconds each. Last words, or even less if you want. We're ready to close off today's show, but I want to hear from each of you. Last bit of advice, really quick, to all the restaurateurs out there in Canada and in the US. What's your advice? Last tip. Chris, start.
You have to focus on quality. Service is important, but so is the quality. And given how operators are financially strapped, that's fine. Cut back to single-ply toilet paper, but do not cut back on the butter that makes your signature dish.
Love that. Jim?
My advice and challenge to the industry is just the opportunity to evolve and innovate in terms of how we use information to make decisions. our industry's traditionally been a try to find ways to be more efficient, do more with less, cut back, that kind of thing. And I'm looking forward to the opportunity to help the industry try to be more productive, do more with the same, grow, and just learn. I think, so my challenge is that if you're not great with the information or you don't know, you need to reach out, because it's going to be the game changer and the difference, I think, moving forward.
I agree. Thanks, Jim. Peter?
Focus on the branding on your takeout packaging. So if you are selling a lot of products through a third-party app, the very last thing you want them to see is your brand. So make sure it's not on this, that it's on your packaging, and that they're not getting their product delivered in a generic white plastic bag.
I love that. And to all those people that have the generic white pizza boxes, write something on top of it. Say thank you. Use a marker and put a big smiley face and say thank you.
Yeah.
It's so easy to do, right? And there's stamps out there. I know one of the guys I work with, he got some stamps for a customer and has some fun with it. Great advice.
We should unbox one.
We should do. Exactly. Andrew?
Yeah, the number one thing would be understand that you're running a business, not a charity, if you don't know what your numbers are and what you need to do to make sure that you can be profitable in this environment. Contact with your accountant, find the numbers, do the work, and start hiring right now, because it will be more difficult soon. Business is going to go up. Those who fail to plan to fail, I think, is the old saying.
Exactly. Thanks, Andrew. Barry, finish us off here, Barry.
Sure. If you're one of those operators, likely in the casual space, that had to, quote unquote, pivot toward takeout and delivery in your business model, and now you're seeing an increase in on-premises, it's not a zero-sum game. Takeout and delivery levels are going to remain pretty steady. Use that as incremental business above your on-premises dining. And then finally, take care of yourself, apply your personal integrity, look after your quality of life, happy owner, happy staff, happy guests. And I'll leave it at that.
Awesome. Thanks, Barry. I fully agree. And, I think the thing is today, and I think, first of all, thank you all for joining our show. And Dr. Sylvain, again, just thank you so much. This advice and tips for our customers that are going to be dealing with food inflation. It is in a sense that you can really work with it if you do all these different things that we talked about today. It's really not that hard, but it takes a little bit of effort, takes a little bit of time, invest time into your business, and you'll be fine with some of this food inflation that we're going to see. It's not that scary. You guys really, I hate to say this, I don't say the word hate, but you really made it not look that bad, right? Because even your graphs weren't that bad. Right? The tend to sometimes, I've seen scary graphs from Chris before. But it really is, so thank you for that. And I think our operators can learn and take something from this today to really help if they're getting busy and when they get the time to look at their numbers and they see prices going up. It shouldn't deter you to moving forward with your business and having a great rest of your year. So thank you. Awesome. Well, I'm going to say it's a wrap for our show, and thanks to everyone that tuned in today. And everyone's going to watch us later on YouTube, Facebook, or LinkedIn. SVK is live every week, Tuesdays and Thursdays. We're going to continue to bring you tons of information as we move forward. We got tons of different shows coming up and great more talks around inflation as we really help you out, really get through this. So, and all the best. And for everyone else out there, get out there, support our restaurant, support our industry, dine out, take out, get on a patio. Oh, it's awesome. I don't know if you guys, have you all been on a patio yet? I'm watching people out my door here.
Not yet, no.
Oh my God, I can't wait. So anyways, thanks again, everyone. And thanks again to our panelists, and have a great rest of your day.
Thank you, Jay.
Thank you.
Thank you.